moves here today already in the Monday trade. We'll be back to Charlie with more on Wall Street coming up in about 15, 20 minutes. We just continue to check back in with Charlie every day here on Balance of Power, our political program, live from Washington, where we connect the dots between Washington and Wall Street pretty much every day. And it's pretty hard not to with the news flow these days. Consider this your Washington Policy Pulse, the weekly call that Nathan Dean puts together here. The Bloomberg Intelligence Financial Washington Policy Weekly Call is now available on your, if you subscribe to this podcast, on your podcast feed. This is all part of producer James's plan to create a Balance of Power podcast network. It takes America's producer to put something like that together. But look, we're pretty closely associated with Nathan and BI, and we thought we would join forces here on the same RSS feed. Careful not to cross the streams. But we have a lot to do with one another here because we're talking about a lot of the same stuff. And frequently my conversations with Nathan have to do with the calls that he's getting from clients. You hear me talk about this every week. Well, clients are calling again based on the latest missive from President Trump. He's on Truth Social this morning talking about football. Nathan didn't know this is where we were going to go, but the president says the NFL has got to get rid of that ridiculous-looking new kickoff rule. How can they make such a big and sweeping change so easily and quickly? It's at least as dangerous as the normal kickoff, he says. It looks like hell. Sissy football is bad for America. Now, when we talk to Nathan Dean, known to some as America's dad, we have to remember partly why he has that nickname is that he is America's coach. Nathan's coaching kids football, soccer. I could keep going here. Let's find out what the actual, he's out there with the kids coaching every weekend. And I'm pretty sure sissy football is just not something that you would stand for on the field.
No, I mean, we do flag
Sidelines.
football just because, I mean, at this
You don't
age,
allow talk like that though, right?
No, absolutely. I mean, we had some kids who got pushed out of the huddle yesterday for talking like that. And they had to learn you had to ride the bench for a couple of drives.
I knew that. All right. Well, he says it's like wanting to roll back the golf ball so it doesn't go nearly as far. You agree with him on this?
No, I mean, look, my Bears, this is a sore subject because my Bears, lost big this past weekend. But look, I mean, when it comes to football in particular, this idea of head injuries is something out there. And parents, especially me and my friends of my generation, you don't want your children growing up and playing football. So, I mean, I love the idea of flag football, and I really love the idea that get the kids athletic, and then if they want to go into tackle, they do it in junior high and high school. But the idea of these kickoffs coming back, I like the new kickoffs.
Look at that. See? America's dad speaking as a parent today on Balance of Power. Of course, the post that we're supposed to be talking about, subject to SEC approval, we're going to go to a semi-annual reporting structure here. President Trump says companies should no longer be forced to report on a quarterly basis, in parentheses, quarterly reporting, but rather to report on a 6-month basis. He says this will save money and allow managers to focus on properly running their companies. He made reference to China and its longer view on management of a company. Of course, we're not China, and there's a law that goes back to 1934 that says companies have to report every quarter. Where are we going here? What's the SEC going to say?
Yeah, so, this is something that President Trump floated back in 2018, and former SEC Chairman Jay Clayton even put out a request for comment. So this is not a new issue. Okay. But what the Securities and Exchange Act of 1934 says is that companies have to report quarterly, but it doesn't say what's in the quarterly report. And so there could be a scenario where the SEC, and look, I think it's feasible. I think by 2027, a lot of public companies, if not all of them, will be moving to a semi-annual basis because the SEC, and this is the note that we put out this morning to our clients, is we essentially said for the first half of next year, look for the SEC to put out what's known as an advanced notice of proposed rulemaking, potentially going to this idea of 6 months, scaling down what companies have to record on a quarterly basis, increasing what you have to do on a semi-annual basis. Now, if you follow the timelines, finalization is 2027. So again, this is not new. And at the end of the day, the SEC is not in the position of telling the White House no. So if this is something that President Trump wants to do, and I think Chairman Atkins, who isn't really, Paul Atkins, the chairman of the SEC, hasn't really talked about this, but he loves capital formation. I think this is something that he could get behind.
Fascinating. But Congress needs to have a say in this, right?
Well, if Congress wants to change the quarterly reporting mandate, they would have to get involved. But the SEC can say, look, just put in a one pager every quarter that says, you good? Yeah, you're good. Now I'm simplifying here. But, you can scale down what the quarterly report says and increase what the semi-annual report is. And so the SEC does have a lot of flexibility here. And again, this is something that was floated back in 2018. But I will say is that the majority of the comments that came back in 2018 were against this move because a lot of investors in the buy-side community out here said, look, we want this transparency. NASDAQ ran a survey at the time, 138 companies. 75% of them, though, from the company perspective, like the idea.
Sure.
So, this is something that I definitely could see happen. And I would just say is that the SEC has plenty of time before the next administration, whether it's Republican or Democrat, to get this done.
This is like telling a congressman you only have to run every 3 years, right? You actually, the idea that you're constantly trying to prove your own worth as a company, as the president says here, China has a 50 to 100-year view on management of a company, whereas we run ours on a quarterly basis. Not good. But we want more information, not less, in our public markets, don't we?
It depends on who you are. Like if you're an investor or if you're looking
if you're an
investor or a market participant, you want as much information as you can get.
Sure.
I mean, it's one of the reasons why clients call us almost every day saying we want information. But from the company perspective, obviously, you don't get caught up in this idea of guidance and so forth.
You don't want to say anything you don't have to say.
And that's exactly what happened back in 2018. And it's really important to note here is that back in 2018, a lot of the companies came out and they said, look, we don't want to get rid of quarterly reports. We want to get rid of guidance. And there was a big letter signed by General Electric, Berkshire Hathaway, all these companies saying, let's get rid of guidance. So there's two issues here. But what President Trump is talking about is specifically those quarterly reports so that if these public companies didn't have to do it, maybe they take a long-term view. And I should note is that all my colleagues who sit in London right now, they're dealing with semi-annual reports. So it's something that the markets have already seen before.
What kind of questions or calls are you getting today? Is there outrage among investors? Nathan, is this really going to happen? What are they asking you?
They just really want to know what's going to happen here because, it's very rare very rare that you and I will have a conversation based off of a Truth Social Trump post. And then I'll say there's actually something there. And so, there is some there because, President Trump, look, he can just pick up the phone and order the SEC to do it. And yes, I know they're an independent agency, but like I said, the SEC generally doesn't tell the White House no.
Right.
But he did it through a Truth Social post. And so the SEC, if they're not going to do it right now, and look, I don't think they're working on it right now, but they're going to start working on it. And I think that there is something that's going to come out with this, but we'll have to see what the comments come out back and say in a year or so.
I'll ask you about the shutdown stuff here in a couple of moments because this is getting to be an interesting time that we're in. 15 days to go. You've been running odds, 40% shutdown. The closer we get, though, and the lack of dialogue between leaders has a lot of people wondering if maybe we're getting to be in a situation where it's unavoidable. Could we sleepwalk into a shutdown? Could we have a couple of days? Where's your head right now? Well,
anything can happen, but I'm still at 40%. Because,
you are?
Yeah, exactly. Because I was at 40% a couple of weeks ago. I'm at 40% now because the increasing political rhetoric is anticipated. Look, they're not coming to get a deal on today's date. They're not going to get a deal by next week's date. A deal most likely will come on September 29th or right after September 30th. And so this is just all part of the playbook.
Is it a clean CR?
I think it is because at the end of the day, the party that offers a clean CR is the one that has the high ground. And so if you come back, if the Republicans offer a clean-ish, I'll call it clean-ish CR, the Democrats, I don't think have an ability to come back and say no, especially when they're talking about an extension to mid-November. And, even though there is some thought on the Republican side that you may not have the votes, I think ultimately they would be able to get the votes here because the Democrats don't really have an endgame strategy with this. And at the end of the day, and this is what I tell my clients, and this is probably the most from the client perspective, the biggest question of ambiguity here is what happens if we get into a shutdown and the director of the OMB, Russ Vought, opens up his playbook. Is it, just going back to what President Trump said on the news this past weekend, he was telling Republicans they don't need Democrats to move forward here. Now, I don't exactly know what he means by that because you need 60 votes to advance this. But if President Trump and the OMB have a plan to say, you know what, 95% of the government is essential and we'll just keep them open and ignore the Democrats, or 95% of the government is not essential and send them all home and see what we can do in 6 months, I don't exactly envision how the Democrats are going to be able to strategize against that.
And if you and I are talking about this, Democrats are certainly talking about this on Capitol Hill, right? They know Stephen I was going to say Stephen Meyer and Russ Vogt is waiting for this to potentially happen. But I'm curious, in our remaining minute and a half, Nathan Dean, are you getting calls about Stephen Meyer, and are you getting calls about Lisa Cook? Or is everybody in a mode where they know that this week the outcome will be the same no matter what happens with these two?
Well, the calls on Stephen Meyer was whether or not he would be in place for the vote tomorrow. And the answer is he's going to be. But I would just say is that, if you think of that one thing that the market is most fearful of, it's the February reappointment of the FOMC voters, those regional bank presidents that are at the FOMC. The Fed governors have to reaffirm their positions. And if we get into a situation where the Fed leadership looks like that they're not going to reaffirm those regional bank presidents, I think that's when the market and my clients will start to get more scared.
Is that a selling event, though? How do you respond to something like that? Or is that a bond market story, not a stock story?
I think it's a bond market story to start. But, the equities always follow.
Sure. Fascinating, as always. Nathan, thank you. No Fleece Fest this week. It got warm, right, in Washington this week. We're back to the jacket. Thank you. Nathan Dean, Bloomberg Intelligence. Look for the podcast if you're already subscribed to this one. And, well, if you're not, why not? You'll get Nathan's on Monday morning. The call has resumed. We've got a breaker